Meta is going all in on artificial intelligence. And it's doing so at a time when some industry leaders are openly questioning whether the AI gold rush is getting out of hand. The tech giant behind Facebook has revealed plans to pour as much as $135 billion into AI-related projects this year, with most of that money going toward massive infrastructure upgrades. That figure is nearly double what the company spent on AI and related systems just a year ago. Over the past 3 years alone, Meta has already burned through roughly $140 billion chasing an edge in the fast-moving AI race. And it has no plans to slow down. Company leadership believes the payoff is coming soon. Executives say 2026 could be the moment AI fundamentally reshapes how people work, changing everything from productivity to team structures. The announcement came alongside fresh financial results, showing that Meta's expenses are climbing faster than its revenue, putting pressure on profit margins toward the end of 2025. Despite that, investors appeared optimistic, sending the company's shares more than 6% higher in after-hours trading. Behind the confidence, however, lies a more complicated reality. The company hinted that AI efficiency could mean fewer humans are needed for certain roles. Tasks that once required large teams are now increasingly handled by a single highly skilled employee using AI tools. Meta has already cut several hundred jobs this year, particularly in divisions tied to virtual reality, hardware, and experimental technology. At the same time, it's aggressively rolling out AI systems designed to help remaining staff, especially engineers, work faster and produce more. Executives acknowledge a widening gap between employees who fully embrace these tools and those who don't, suggesting that adaptability may soon determine job security. Not everyone is convinced this massive spending spree will end well. Across the tech and finance world, warnings are growing louder that AI could be heading toward a bubble, reminiscent of the dot-com crash at the turn of the millennium. Some leaders argue that while AI may eventually surpass the internet in impact, today's hype has outpaced reality, and not all companies will survive the shakeout. Others have pointed to irrational investment behavior and overexcitement among markets. Even prominent figures closely tied to the rise of modern AI have admitted that enthusiasm may be running too hot. For now, Meta is betting big that the gamble will pay off. But whether this moment marks the start of a tech revolution or the peak of another bubble remains an open question.